Hello all. Repeatedly they are asking this problem in many previous year question papers. Anyhow, we will discuss this problem now also. This problem I have taken from the page number M54, problem number 16. This is the 5 marks problems I have taken from the previous year question paper. From the following particulars, compute the total income of Mr. David for the assessment year 2025-2026. Loss from house property minus 8,000. Short-term capital gain on sale of shares 95,000. Long-term capital loss on sale of bonds minus 85,000. Other sources, interest on government securities 18,000. The assessee has unabsorbed depreciation of rupees 35,000 being brought forward from 2011-12. Assessee have closed the business and all the assets have been disposed of. Now, see, house property loss they have given, and then short-term capital gain 95,000 they have given, long-term capital loss again they have given. Long-term capital loss can be set off only against the long-term capital gain. This 85,000 should have to be carried forward for the next 8 assessment year, and then it can be set off only against the long-term capital gain in future whenever there is the gain. Okay, this 85,000 must have to be carried forward, and then interest on government securities comes under the other sources 18,000, and then unabsorbed depreciation, that is it is not the current year unabsorbed depreciation, it is the previous year unabsorbed depreciation, that is 35,000. This should have to be set off against the income if anything is there in your hand. Now all of you have a look at this question for a while. Take a screenshot of this. Now let us carry forward with the solution. Loss and all you need not, you can adjust it later. Now first, computation of gross total income for the assessment year 2025-26. Short-term capital gain on shares 95,000. Other sources, interest on government securities 18,000. Then total income before adjustment of loss 1,13,000. You see, 95,000 plus 18,000 comes to 1,13,000 is nothing but it is the total income before adjustment of loss. Okay, first you include all the income, so loss can be set off only against the income. If income is there only, then only the loss can be set off, otherwise the loss cannot be set off. First you include all the incomes. Now when it comes to the loss, see the question. Loss from the house property 8,000 minus 8,000. So house property loss can be set off against any head of income to the extent of 2 lakhs other than the casual income. That is, you can set it off against this 1,13,000. Total income after adjustment of loss 1,05,000. Now first, loss you have to adjust. Secondly, you have to adjust the unabsorbed depreciation of the previous year. 2011-12 means preceding years only, not current year. Okay, so 35,000 should have to be adjusted against the income of 1,05,000. 1,05,000 minus 35,000, you will be arriving at 70,000 as the gross total income. And then regarding long-term capital loss, as I told earlier, long-term capital loss can be set off only if there is the long-term capital gain. So even if there is the short-term capital gain also, long-term capital loss cannot be set off. So long-term capital loss should have to be carried forward for the subsequent 8 assessment year, and then it can be set off only against the long-term capital gain if arises in future. Fine. Just have a look at this problem and take a screenshot. Thank you. Just like and subscribe my channel.